morning, guys. It's Tuesday, September 23rd, 5:25 a.m. Central Time. Grain markets mixed to lower this morning. December corn futures down 1 at 420 3/4. November soybeans down 4 3/4 at 10.06 1/4. December Chicago wheat down 1 3/4 at 5.09. December Kansas City wheat down 2 1/4 at $5 even. December spring wheat up 1.5 at 5.65 1/2. Lots of news out of Argentina yesterday. Why don't we start there?
So Argentina suspended export taxes on a range of agricultural products yesterday, including corn, soybeans, and wheat. The measure is intended to boost export sales and generate revenue to stabilize the peso and rebuild dwindling reserves. The suspension will remain in effect until the end of October or until declared exports total $7 billion. The tax break is expected to trigger a wave of selling, with more than $8 billion worth of last season's harvest still unsold. Analysts, however, caution that the surge could create a supply glut and cap potential price gains. Also on Monday, U.S. Treasury Secretary Scott Bessent said the U.S. is ready to use all necessary measures to help prevent Argentina from sliding back into crisis after a sharp sell-off in its financial markets driven by the weakening peso.
All right, we're going to get to the U.S. aid to Argentina in a second. First, I want to run through this tax cut scenario and exactly what's going on. So Argentina is a substantial exporter of corn, soybean meal, and soybean oil. They don't export a whole lot of soybeans because they crush most of what they produce. Argentina projected to be the world's third largest corn exporter this year, accounting for 18% of projected exports. With regard to soybeans, only 3% of projected exports. They are the top meal exporter, and they are the top oil exporter. This is what ending stocks are projected to look like, or probably look like, in Argentina. They don't keep a whole lot of corn around, and we're in this period right now where they're getting ready to plant the forthcoming crop. So old crop supplies of corn, soybean meal, and soybean oil are very much exhausted. I don't know that they're going to be selling very much of any of those items. They've got a lot of soybeans sitting around. 24 million metric tons is USDA's estimate of the ending stocks. And the reason that they hold a lot of soybeans on an annual basis is for a couple of reasons. In Argentina, they use soybeans, exporters and farmers both. They use soybeans kind of as a store of value because their currency is so volatile and they've had crazy inflation. The political environment is just very much uncertain. So they hold soybeans as a store of value. The other reason is that they crush a lot of the soybeans. So I think that the processors like to keep healthy stocks on hand. I don't know necessarily that this tax cut results in a ton of additional export business. It's going to be a little bit. Is it really going to eat in to what the United States is doing? Is it really going to hurt us? I don't know if I'm convinced of that. Let's go to this next story. So the U.S. is going to do some sort of, call it a bailout, whatever you want to call it, with regard to Argentina and their financial situation. The support could involve measures such as currency purchases. We might buy some Argentina sovereign debt. We might use swap lines. The reason that we're doing this is because Argentina is seen as a key U.S. ally in Latin America. We want to maintain some influence there. We want to signal that if a country follows market-friendly practices, in quotes, that the U.S. is willing to support them. But there's no finalized package here. All options are on the table. If you're a farmer, which is our crowd, that's who we talk to, this is probably not like the best news and probably an aggravating headline, because Argentina is actively working with China to ship grain and oil seeds to China. Back in May, this Bloomberg article is from May, China is said seeking Argentina crops as it skirts U.S. tariffs. China signed a letter of intent with exporters in Argentina to buy about $900 million of soybeans, corn, and vegetable oil. It's not necessarily a ton of money, but if you're a U.S. farmer, you got to be looking at this and saying, like, what the hell? You know, I mean, what to this point has this administration really done to help the U.S. farmer? So to put this in context, the Trump administration was elected into office in late 2024, right? And I would argue that at that time, November of last year, the U.S. farm economy was in its second year of recession. There is no recession scorekeeper. I'm your recession scorekeeper. Last year was the second year of the U.S. farm economy recession. This year is the third year of the U.S. farm economy recession. So Trump gets into office, immediately starts a trade war with China. We lose a whole bunch of business. And there really hasn't been much help since. We've seen a lot of talk from Brooke Rollins. Trump hasn't said very much about farmers at all. I mean, he had what I would call a failed phone call with Xi last week. There's been no progress on the U.S.-China trade front. There are some things that were in the big beautiful tax bill, as Trump would call it, that will help U.S. farmers. Crop insurance safety nets. They're going to increase the reference prices. The small business deductions, estate tax stuff, but that's not right now. What's happening right now is farmers are getting into the field and they're harvesting corn and soybean crops that are going to lose a ton of money. And we've been told that there's going to be a bailout. There's a lot of differing opinions on the bailouts. I don't know if I'm necessarily a huge fan. The trade war this time around, I think, is worse than the last time around because not only is China not buying soybeans, but because the cost of production for the U.S. grower is so astronomically high versus what it was in 2018 or 2019. So the farmer's in a really tough spot right now. So I think that this administration needs to get its head out of its ass and look at its constituency here, because we're helping Argentina, we're helping a lot of people, but they're not helping the U.S. farmer, not right here and not right now. And I'm not necessarily saying that a bailout is the answer. I think that's going to be the answer. That's still my contention. They've talked a lot about it, but I'm not thrilled with what's going on here. Here's soybean futures. Nov 25 fell below some chart support this week. Looks a little bit more probable that you test this 985 chart support. And for those of you guys who aren't totally familiar with farm budgets, cost of production for soybeans in the United States for the average grower this year is somewhere in the $11.50 to $12 range. And what you're seeing here is the futures price at $10. There are areas of the country where cash soybeans are trading south of $9. So the farmer's going to lose every bit of $2, maybe $3 per bushel, given today's prices and what's going on. So we need some help from the administration. We really do. And I'm sorry to say that it really hasn't happened yet.
U.S. corn conditions declined last week. As of Sunday, 66% of the corn crop was rated good to excellent nationally, down from 67% the prior week, but still well above the 5-year average of 58%. The rating was the highest for the week since 2018. USDA estimates that 11% of the crop is harvested nationally versus 7% last week and 11% on average. Soybean conditions also declined, with 61% of the crop rated good to excellent, down from 63% the previous week, but above the 5-year average of 58%. USDA estimates that 9% of the crop is harvested nationally, compared to 5% last week and 9% on average.
We can look at the crop rating charts, and yeah, we've declined, as we often do seasonally in corn and also in soybeans. I don't think that the trade is looking at the ratings the way that they did a couple months ago. And I think that it works the same way every year. When you're in call it late June, early July, traders and analysts, they take these ratings and they model them and they try to estimate yield based on prior years and how this year correlates to those prior years. Those days are over. What we're into now is yield report season. As it relates to corn, I think that the yields are not nearly as good as what people had thought they would have been back in, say, July. And the market's attitude, the corn market's attitude and traders' attitude and analysts' attitude, it all started to change in August when the weather turned hot and dry. It was not an ideal finish for the corn crop. The disease pressure, the southern rust stuff, it was very, very real, and it absolutely had an impact on the crop. So I think that as far as the national corn yield is concerned, there was talk a couple months ago it's going to be 188, 189. It ain't going to be 188 or 189. It's going to be, I think if I had to guess today, just based on what I hear traders discussing, it's 179 or 182. That's kind of the range that I believe the trade is working with right now. Now, as it relates to soybeans and yield potential there, it's the contrary. Yield potential appears to be very good. Early reports are very good. So maybe a little bit different. And again, I first to admit, hey, August was not ideal at all for the central and eastern corn belt. It was very, very dry, but the yield reports we're hearing early, it's very early, appear to be pretty good.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video with Pete Meyer?
Pete Meyer Unfiltered. The most interesting part of this video yesterday was I thought the piece about USDA and exactly what's going on within USDA and specifically the NAS and the WASDE divisions. So USDA is a massive, massive entity, and most of what USDA does revolves around food stamps and nutrition programs and that sort of thing. The people who publish the statistics on agriculture and yields and acreage and stuff, it's very, very small. they've got a lot of problems, and Pete probably knows more about this than most. And there's a reason why the data out of USDA has been poor and less accurate than it normally is. And it's never totally accurate, their estimates, but it's been pretty bad, especially the corn acre number this year. There's reasons for it. And Pete discussed all of it in today's premium video. Chris Barron's going to be on, and we're going to do what I would call some hardcore grain marketing information. We're going to talk about cost of storage. What does it actually cost you in the real world to keep your corn bushels or soybean bushels unpriced and carry them for months? There's a lot of things involved and a lot of considerations: interest costs, storage costs, handling, all sorts of different things. We're going to talk about that today. We've got some excellent mailbag questions that came in from the premium crowd. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tries to sell you anything else. Premium subscribers, we absolutely love you to death. You are the ones who allow us to do this public show every single day. We don't make any money doing YouTube or the podcast. This is all big, giant loser for us. And if you're not a premium sub, you should check it out.
Soybean planting in Brazil is on pace with last year. According to well-followed private group Ag Rural, as of last Thursday, 0.9% of the crop was planted, matching last year's pace. The group projects this season's crop at a record 177.7 million metric tons, up 3.6% from last season. Ag Rural also reported that 25% of Brazil's first corn crop was planted as of last Thursday, slightly below the 26% reported at the same time last year.
No significant problems or anything to report with soybean planting. It's very, very early. They're going to harvest supposedly 120 million acres of soybeans in Brazil, which would be a record high. They increase almost every single year. Because Brazil continues to grow more, the U.S. export window continues to get tighter and tighter and tighter. And this year, I don't know exactly what the U.S. export window is going to look like, but it's a question mark. Brazil grows 2 corn crops. The first one is the smaller crop, and it's mostly for domestic usage. The second crop, which is planted after soybeans, is the big export crop.
U.S. corn shipments were strong last week. USDA reported that 52 million bushels of corn were inspected for export during the week ending September 18th. The print was down 12% compared to the previous week, but up 16% versus the same week last year. Soybean shipments were near the lower end of pre-report expectations at 18 million bushels. The print was down 41% compared to the prior week and down 3% versus the same week last year. Wheat shipments easily surpassed expectations at 31 million bushels. The print was up 13% versus the previous week and up 18% compared to the same week last year.
Look at the wheat shipments, really good. And what does wheat do? Fresh life of contract lows across all 3 December contracts that we track, the SRW, HRW, and the spring wheat contracts. It's acted very, very poorly. Corn shipments were great. They've been great. Soybean shipments could really be a hell of a lot worse. I mean, we were better last week, but considering that China's absent, they're really not too bad.
Cattle futures surged yesterday. The rally was fueled by the discovery of a New World screwworm case just 70 miles south of the U.S.-Mexico border, the northernmost detection of the pest since it first appeared last fall. The news sent both live and feeder cattle contracts sharply higher, with deferred feeder contracts reaching their daily limit of $9.25 per hundredweight. Mexican feeder cattle imports are slated to be down about 1 million head this year, significantly reducing feeder cattle placements. Down in Texas, placements were down 9% year over year in August, marking their lowest level since 2016. The border is likely to remain closed for the foreseeable future, which of course will provide additional support for the cattle market.
So is that an extremely bullish headline, or is it just fuel to the fire?
I'd say it's fuel to the fire. I mean, we had a big jump yesterday, but we knew the border wasn't going to open anytime soon. They're not doing enough to get the situation under control.
No, the markets look much different after yesterday. We had this kind of week or week and a half of consolidation, and now you've got a big spike up, and a test of those contract highs in the live cattle and also the feeder cattle looks a little bit more probable after that big spike yesterday.
We had a flash sale of corn yesterday. U.S. exporters sold 13 million bushels of corn to Mexico for delivery during the current marketing year.
That's a larger sale than what we've seen, and the new crop book of corn export sales is absolutely fantastic. I believe we are ahead of where we need to be to hit a record USDA projection for they're projecting record corn exports this year. And I think that's exactly where we will end up. Cattle rallied yesterday. We talked about that. Outside markets are kind of quiet. Stocks are mixed. Treasuries are mixed. US dollar is about flat. Crude oil is up 61 cents in the November WTI at 62.93. Have a great day, guys. We'll be back on Wednesday.